Here we have the 4-hour price chart for Tesla Incorporated, stock ticker TSLA. As we can see here, the stock is trying to form a bit of a recovery following the somewhat substantial declines that were seen yesterday. Overall, this is an interesting price movement because we now have what can be defined as the current trend that is most likely to influence price action going forward. If you've watched the prior videos on this stock, you'd know that we were looking at this prior downtrend here, as the significant trend movement. But now that we've broken above prior highs here, we can see that a new trend is starting to develop, and we can start to adjust our trading projections here a bit. I do want to leave this longer term kind of downtrend in place because I wanted to be kind of clear here that we are in a period of reversal. This isn't just sort of an emerging short term trend. I am viewing this as a longer term reversal for the stock. So all these are factors that need to be kept in mind, and these are mostly based on developments that have happened over the last few trading sessions, roughly week and a half or so. We are in sort of a new time frame here for TSLA shares. Currently, what we have to do is kind of assess the damage that was done during yesterday's trading session. This was a broad-based sell-off. This was not bearish activity that was specifically being directed at Tesla. We saw similar moves in many stocks: Nvidia, Apple, Meta Platforms saw major declines. We were really seeing declines. On a broad basis here. And the tech sector as a whole was really being punished more than the rest of the market. But as we can see here, there are investors that are willing to kind of step in here and start buying in at the lows, probably because there's a bit of a fear of missing out here. Like, is this the opportunity to buy back in before the next rally emerges, type of thing. So what we really need to do is not trade based on those expectations, not trade based on fear of missing out or anything like that. We need to base on our trades on actual price action. So what we can see here is that this recent decline, this was from the 271 level, ultimately posted lows all the way down to 233.08. I mean, this was a significant decline lower. And we did retrace roughly 25% of this entire move. As you can see here, we did break through the 23.6% Fibonacci retracement, which came just below 240. As we can see here, during this process, we also broke below the 20 period exponential moving average. This would be this yellow line here would be the 20 period EMA. So overall, there was a fair amount of damage that was done here. But during this process, we were able to break back below overbought territory. That would be this indication here. And this is significant because we were trading in heavily overbought territory. And it was for quite a long time, relatively speaking. We don't generally see stocks trade above the 90 level in the RSI, Relative Strength Index, for this period of time. You can see here that this is a very large green reading here. So overall, this is a bit of a healthy correction because this does allow us to kind of allow the relative strength index reading to kind of work itself off, roll over, and kind of normalize back toward, back at least toward the middle of the range. I mean, we're no longer in overbought territory. We're also not quite yet back at the middle of the range. Currently, the RSI is showing readings just below 66. So we're still somewhat close to the overbought region, but we're in territory here that would be considered to be acceptable. If you were possibly considering short-term long positions. Overall, the momentum in this reading, our relative strength index, still measures in the positive direction. So we can see that the stock should continue to be supported by upside share price momentum. In addition to that, the moving average cluster is also moving higher quite sharply. So this does suggest that we should continue to see support levels develop at higher and higher levels. Overall, this break is a bit concerning because we did lose more than one technical indicator of support here. But overall, the broader market does seem to be trying to stabilize. Price movements higher in Apple have been fairly pronounced. Has recovered almost all of its losses previously, uh, all of its previous losses. So, overall, it does look like the market is trying to stabilize here and trying to find, some bullish momentum to resume the market's prior trends. So, currently to the downside, what we would be looking at would be the this 233.08 level as a potential level to kind of unlock further declines. But as things currently stand, as long as this momentum reading remains positive, I would expect to see prices kind of probably hover roughly toward the mid 250s roughly, and possibly a sideways consolidation pattern, so that uh, this relative strength in index rating can start to kind of drift back toward the middle of its range, and as broader market conditions can continue to stabilize. So here's the current market analysis for Tesla Incorporated, stock ticker TSLA.